Hello traders, and welcome to another edition of the Market Open Preview, April 30th, 2014 on a Wednesday. Thank you so much for joining me, traders. Please take note that today is the last trading day of the month, so it's possible we'll see some movement in the markets as brokers, traders are getting ready to close their books. It's great to be with you today on this overcast, rainy day in Thailand. So let's get started. If you would, please give me the opportunity to introduce myself to you. My name is William K. Gilday. I will be your moderator through the Market Open Preview series. I started trading in 2006, traders, from an infomercial at 2 o'clock in the morning, and I went to a little meeting and I got hooked. So in 2008, I retired in the United States after a great career of 27 years in the fire rescue department. And 9 days after I retired, I moved to the great country of Thailand, where I'm currently coming to you from the cloudy beaches. So it's really great to be with you today, and we have a lot to talk about, so let's get moving. Let's get to the charts, but before we do that, let's take a look at our risk disclaimer, the legal stuff. Traders, remember that Forex trading has a large potential of rewards, but also a large potential of risks. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Do not trade with money you cannot afford to lose. Traders, if you're trading your car payment, mortgage, or rent, you might want to rethink that idea, and maybe you should go to a demo account until you can trade a live account comfortably. All right, traders, let's take a look at today's news events. We have some news coming out today throughout the trading day. Remember, traders, this comes to you before the London Open, so the news events that I'm going to talk about is hopefully going to come out in the London session. The only one that might not is the first one on top of the list, which is the yen. The Bank of Japan has a press conference today, and as you know, the Bank of Japan does not tell you what time they're going to have the press conference. They just come out and do it. So keep an eye on that. That is a market mover, and it will rattle the currency pairs when they have their press conference. Okay, in the Eurozone, we have German unemployment rate, and that is a high impact news event. We also have the Euro CPI year on year, another high impact news event. Coming down to the Canadian, we have GDP month on month, another high impact news event. And that happens just before the U.S. session. And in the U.S. session, we have ADP non-farm employment rate. And also in the U.S. session, we have GDP quarter on quarter. And that is another high impact news event. So we have quite a bit of data coming out today. I would check your local times, what time these news events come out, and just put a note on your desk so you know that these events are coming out. And if you're in the market, protect your position. All right, traders, let's not waste no time. Let's get to the charts. Okay, this is the USD Japanese yen pair, and this is a daily chart. Now, traders, I have to tell you, I do not trade the dollar yen on a regular basis. I think I might have traded it 5 times in the last 12 months. It's not a pair that I trade on a regular basis. I use it more as a tool with my yen pairs. However, today I decided let's do some analysis on the dollar yen, as I really haven't discussed it in the past, and there are traders that trade this pair. One of the reasons I do not trade this pair on a regular basis is because it just doesn't move the amount of pips. It only moves about 60 pips a day. So I like trading pairs that move 85 and above when I'm taking my trades. I want the probabilities on my side. So one of the first things that caught my eye was that on this pair was the Bollinger Bands are closed. Now, understand, the Bollinger Bands are closed, but it's a 200 pip range. So there's plenty of pips in there to trade, and that is something we just need to keep an eye out for. If you're trading the daily chart, I would just wait for this to give you a bullish pattern and take this to the upside, because the pair is actually in an uptrend. We're seeing it sideways for a long time, but if you take this chart and expand it out, this is absolutely in an uptrend, and we're going to take a look as we move to the next time frame of the 1 hour chart. Okay, so here's the dollar yen on a 1 hour chart, and this pair is in an uptrend. And the only way to trade this pair, it's really simple. Now, these Bollinger Bands are wide open. The bottom Bollinger Band, the upper Bollinger Band, they're open. What do you notice on the bottom Bollinger Band, traders? Yes, price is outside of the Bollinger Band. I talk about this all the time. When price is outside the Bollinger Band, what happens to price? Price will move back inside the Bollinger Band 99.999% of the time. Therefore, I'm waiting for price to close above that 200 exponential moving average, being the green line on my charts, and we can look for long trades. We're taking a look to take this pair to the upside. Okay, let's go over to a 15-minute chart. This pair looks very easy to trade. Looks very, very easy. It's not complicated at all. It's pretty straightforward. So let's take a look at a 15-minute chart, traders. Here is the dollar yen on a 15-minute chart. Again, we're looking for the same thing as we did on the hourly chart, and we're looking to take this to the upside. One thing that caught my eye when I was getting ready to do this video was look at the MACD, traders. The MACD is extremely bearish. The histogram continues to show us longer spikes to the downside. It's already been below the zero line for some time and looks to be going down. So I would be real careful with that. But our trade plan is the same as on the hourly chart. We're waiting for this to close above the 200 exponential moving average. What could be some of our issues here is look at the middle Bollinger Band, which we know is a 20 SMA, simple moving average, is pointed down, and the upper Bollinger Band is pointed down. Those Bollinger Bands, if you're going to trade this, needs to go sideways on the 15-minute chart. You might be better off trading off the hourly chart. Yes, your drawdown's a little bit more because of your stop loss, but this 15-minute chart looks like it's going to have some bumps in the road before you can get to your take profit area after you figure out where you're going to enter your trade and work your trade plan. So that basically wraps that up on the dollar yen pair. Pretty simple trade plan. Wait for the 200 price to go above the 200 exponential moving average. Look for a bullish candlestick formation and take it to the upside. All right, traders, let's take a look at our next currency pair. This currency pair is the Aussie dollar on a daily chart. This pair is in a downtrend, traders. If you expanded this chart out, and I couldn't get the whole chart in, but if you look at a daily chart, you'll see that this is absolutely in a downtrend. This, to me, looks like a correction. I know it's a daily chart, and that's a lot of days to be in a correction, but it is in a correction, and this looks to be resuming to the downside, and it's just continuing the trend to the downside. So I'm looking for sell trades on the Aussie dollar, and my bias is because of the daily chart, and it looks like it's going to do that. Our Bollinger Bands are open. Everything looks great. If you were trading this on the daily chart and you were trading daily charts, what would be your concern here? Well, your concern is you're trading into that 0.9200 area of the 200 exponential moving average being the green line, and that would cause you some concern. The other thing is if you look at the MACD on this chart, you'll see that it's coming down to the zero line, which is good, as this could continue to the 200 and then continue to the upside. But it is in a downtrend, so we're looking to take this to the downside. All right, traders, let's go to the 1 hour chart and see if we have a trade setup. Alrighty, so here we are, and we do have a trade setup to answer that question quickly. And what we have here is this is the Aussie dollar on the 1 hour chart, and it's a very simple trade plan. We want to take this where it is now, or if it pulls back up some more, which is great. And traders, this is coming to you about, I'm doing this presentation about 2 hours before the London Open. So, you know, price is going to move between now and the London Open. I'd like to see this move up a little bit. We keep getting the higher highs and higher lows, so it's on the up move. Look at the center Bollinger Band. moving up. The upper Bollinger Band is open to the upside. So I would like to see this get as close as we can to that 200 exponential moving average on this hourly chart and take this to the downside. Find a bearish candlestick pattern. Maybe we'll get a hangman, a couple of dojis, something like that to signify that we want to take this to the downside and the bulls are out of steam and we can take this down. And we're looking at take profit at 0.9337. And you're probably saying, William, why are you taking profit so early? Look at that other pin bar way below that. Traders, I'm looking left of the chart, and to me that looks like a very strong support area at 92.37, and that is where I would take my profits, maybe even higher than that, maybe 92.43 in that area to make sure that my target was hit and I was able to take profit. Okay, traders, let's go down to the 15-minute chart and see what we have. Traders, this is the 15-minute chart on the Aussie dollar, and this is complicated trade plan here. This to me is an up-down move, and this is going to take some patience if you're trading the 15-minute chart. I think the 1-hour chart is going to be a better trade setup. Look at these Bollinger Bands. They're horrible. They're closed very tightly. Remember, we're looking for a down trade. We're looking to short this pair. So you can see I drew a trend line. It's a 3-touch trend line, so it is valid. So normally we would take that, let a candle close below the trend line, and then take the short, putting our stop above the trend line. What is the problem? The problem is we're shorting right into the 200 exponential moving average at 92.67. So I'm really not eager to take that trade at that level because we're coming into the 200. Also with the 200, what do we have? We have a Bollinger Band that's sticking straight up. I'd really like to see this trade has come back up to the 9300 area, which is like 24 or 27 pips away at the time of the video, and then take it to the short side. I don't like entering this trade at either level on the Aussie dollar 15-minute chart. So it is a little complicated. I would rather see it go up and then take the short. I don't think we should take the short below the trend line, and I don't think we should take the short at the 200 exponential moving average due to the fact of the Bollinger Band, and this is pretty strong support. Traders, I'd like to thank you on behalf of myself and FXCL Excellence in Trading. Thank you again for joining me, and until next time, traders, have a safe trading day, and keep in mind it is the end of the trading month as our month comes to a close, and watch your positions and a lot of news coming out today, and keep that in mind. Traders, have a safe trading day and take care. Bye-bye.